Good afternoon. It is Saturday, so it must be time for the senior moment. This is Connie Clark with Home Helpers, and I have someone very interesting with me this afternoon. It's Sue Bressnee, and she is with State Farm, and we're going to talk about long-term care insurance. And I was talking to her a few weeks ago about a bunch of other things, and she had pulled out this a shopper's guide to long-term care insurance. And I found it very, very interesting. And so I thought, why not sit down and talk about this book, what's in it, what kind of information, things you need to ask yourself when you're starting to look at long-term care insurance. So welcome, Sue. Thank you.
Thank you.
I've talked a lot on here about senior care and how much it costs and who's caring for who. And long-term care insurance is one of the big things that I think a lot of us baby boomers are really starting to see that we need as we start caring for our parents. Mm-hmm. And a lot of our parents do not have long-term care insurance. And we're seeing, oh my goodness, we better get it for ourselves because, in sometime in the future, we're going to need someone to care for us.
Yeah.
And so can we just walk through this? And tell me about this book first.
This book is put out by the National Association of Insurance Commissioners, and it's a guide to purchasing long-term care insurance. It answers all the questions that someone would have if they're looking at purchasing a policy, and what does each piece of that policy mean, and what do they need to look for in the policy that they want for themselves.
Okay, and so this is not put out by any insurance company, by any state. This is something that the government has put out, and it's a generic.
It's generic, and it's really to help educate somebody who's looking for a policy.
Okay.
Or maybe they have the assumption that Medicare is going to take care of it.
Yeah, and we've talked about that Medicare does not, and Medicaid does, but then you're not in charge of where you go and who cares for you.
And you have to be financially destitute.
So the very first question in here, as we go through this, is what is long-term care insurance?
Long-term care insurance is what pays for what we call the activities of daily living. So it's not medical care that your Medicare pays for. It's the cleaning, cooking, bathing, all of those activities that you would do at home or maybe in a facility that aren't going to be covered by your medical insurance.
And those are what's called activities of daily living. And like you said, it's things like bathing, eating, dressing, toileting, continence, and transferring, those kinds of things.
And they're going to refer to those as the ADLs when you're looking at a long-term care policy. So just activities of daily living.
Okay, and then the next question on here has to do with how much they cost. Now, I know in our area here, the average skilled nursing facility is anywhere between $6,000 and $7,000 a month. And I've heard last week of one that has what they call a lockdown unit for advanced dementia or Alzheimer's, and that one was $12,000 a month.
And that's pretty average in our area.
Exactly.
And depending on the level of care that you require or you want, the cost is going to go up.
And even for an assisted living, that can range anywhere from $3,000 to $5,000 depending on the level of care.
Right.
And for someone to come into your home, I think I saw the average for the state of Idaho is anywhere between $18 and $22 an hour. Mm-hmm. So caring for someone is not cheap.
It's not. And Connie, I think I shared with you that my neighbor just passed away from cancer, and she stayed home for that entire time, for 5 or 6 months. And her care was running $8,000 a month to have somebody unskilled in her home with her.
Exactly. And a lot of people may think, well, hospice pays for all that. Hospice pays for the skilled piece of it.
Right. And hospice isn't going to be there but maybe once or twice a week.
Exactly. So it's not someone there 24/7.
Right.
So then the next question in here talks about who pays for long-term care. And one of the things is your pocketbook, things that come out of your savings. Another one, they say Medicare. But like we were talking, Medicare only pays for the first 100 days.
Right.
and in a skilled facility,
Right.
not in an assisted and not at home, in a skilled facility.
Right.
And sometimes supplements can help pay for that, but it's still only the 100 days.
Right. So I have people come in all the time and they say, "Oh, well, I have Medicare and they'll take care of that." No, Medicare's not going to take care of that. Or I'm a veteran. Well, you may have that through your veterans, but do you have a facility in the area that's going to take you?
And that's only if you're at the skilled level.
Right.
If you're not at the skilled level, which means you have to have a nurse on call right there with you 24/7. If you're not at that level, they only pay for their aid and attendance pension, but that still does not come up to the cost of an assisted living.
Exactly.
And the next option is long-term care insurance. So in here it talks about who's going to need long-term care insurance.
The statistics are pretty shocking right now. They're saying that 1 in 4 individuals is going to need some form of long-term care. They may only need it for 2 weeks. They may need it for 10 years. And
that statistic raises as the person gets older.
It does. And so 1 in 4, that's a large number.
That's a very large number.
And that number, and as our baby boomers begin to move into that age of needing it, we are expecting that number to increase to 1 in 3.
A lot more. A lot more. And so the question then becomes, well, how do you buy long-term care insurance? And one of the things on here says, well, you should not buy long-term care insurance if you can't afford the premiums.
Right. And so when I'm meeting with somebody, there's some questions that I have to ask them to determine, are you eligible to purchase this policy? I cannot sell this policy to somebody who can't afford it. If they're taking food off their table to buy this policy, I can't sell it to them. But what I help them determine then is, maybe your family wants to help buy this policy for you, because ultimately it's going to come back on your family to help provide that care.
That's who's going to care for you,
either physically or financially. And wouldn't it make their lives easier and your life more comfortable if you had something in place to do that?
It talks about if your only source of income is Social Security, or if you're on Medicaid. But you really should consider buying it if you have some sort of assets or income, if you want to protect some of that income, and if you want to stay independent.
And if you want to stay independent, I was at a seminar recently, and this gentleman said, I want to pick where I'm at, and I want to pick my nurse. And Medicaid isn't going to do that for me.
No, they're not.
And he said, she's going to be darn cute, too.
Oh, my goodness. So there are a lot of different types of policies. You can go yourself and get one. You can get one from your employer. Some employers offer them.
Some employers offer a long-term care policy as part of their benefits package. What you have to be careful of is, will you be able to take that policy with you when you leave that employer?
Plus, you get you don't get to pick what you want.
You don't get to pick what you want.
It's like group insurance.
Right. And I have seen situations where we had a gal that worked for our company. She was 35 years old, and she had a brain aneurysm. And she required long-term care for 18 months. And fortunately, she had purchased that through the benefits enrollment, and she had long-term care at 35. Now, people aren't thinking at 35 they're going to need long-term care, but accidents happen. We get sick. So I say, if you can buy it through work, that's one avenue to purchase it. But I like to have control of my insurance. What are the benefits? How much do I want? And I want to be able to own that beyond
once you leave there. Exactly. So what kind of policies are there out there? I see there is a chart in here that says your age and the maximum amount. And I see that as you get older, you can have larger amounts of insurance.
Right. So what you want to do is sit down with an insurance agent and look at what's your age and what type of coverage are you looking for. And we will go through that and talk about what each one of these areas would cover and determine for you how much insurance is going to be necessary. Okay. How much money do you have in the bank? How much of that do you want to make sure is still in the bank? Do you want to ensure that your entire coverage for care is going to be covered, or maybe you have enough assets that
Can pay part of it.
That can pay part. You'll pay part, and the insurance pays part.
And that's the next thing on here. It says, how are benefits paid? Now, I know from working with long-term care insurance policies in our office, some of them, the benefits come directly to the company that's caring for them. And some of them, we submit the information to the insurance company, and the benefit dollars go to the family or to the person that we're caring for. And then they in turn turn around and pay us. So is that an option that you can get with any policy?
It's going to be based on the insurance company.
Okay.
And how they're going to process it. I have not seen on an application or on quotes that I've reviewed where that was a feature.
An option.
Right. It's going to be, this is how this insurance company processes their claims.
So that might be something when you're going, if that's important to you, then that might be something you want to ask is, how are benefits paid? Do you pay the company directly that I have nothing to do with it? Or am I required to pay them up front and then get reimbursed for the care? Because that could mean a lot of money.
Well, it could mean a lot of money, and maybe they don't even have that type of liquid asset. Maybe all of their asset is in their home, and they don't have the financial resources to
pay for it
check
up front and then be reimbursed.
Right.
So that's an interesting question. So as we go through all of this, now there's something on here that says federally tax qualified policies. What does that mean that's in here?
Well, Connie, let me take a look at this.
Does that mean that you can deduct it from your income tax?
Well, and because I'm not a CPA, I would have to read through this and get a little bit more clarification on it.
Okay.
But let me take a look at this on our break, and then I'll come back and answer that
sounds
question.
Good. That sounds good. Because I don't expect you to know everything, and that's why we have this book. Because when you're getting ready to go purchase long-term care insurance from anybody, you really need to know what you're talking about before you walk in there, and have all your homework done.
Well, or you do need to understand what you're going in to purchase, because I have run across policies that people have purchased and they really didn't understand what they were purchasing. And my company requires that I give this book out every single time I have a conversation about long-term care insurance so that they can become educated. And my understanding was that this was a requirement by the state, that anybody who sells long-term care insurance. Now, I could be wrong in that arena. It might just be that State Farm says, hey, we want our policyholders to be educated on what they're purchasing. So I give this out every single time.
And you really do need to understand it. And what I would suggest is to keep this book, because you may purchase the policy now and not need it for 10, 15, 20 years. And then when it comes time that you need it, you don't remember what ADL meant.
Right. And you may not know because of dementia.
Because of cognitive things, right. So on here it talks about what services are covered, and we talked about that. It's skilled nursing or nursing home health, which is the skilled nurses coming out, respite care, hospice care, personal care, assisted living, adult day, or anything like that.
And that's something that you want to make sure of when you're purchasing your policy, that if you want to stay home, are they going to pay for that care at home, or is it only in a facility?
Good point.
Do you want to be able to go to an adult daycare facility and make sure that that's covered?
Absolutely.
And some of the older policies are going to be different than what is required to be included in a policy today.
And so if you've had yours for 10, 15, 20 years, take a look and see what's in there.
Exactly.
Okay. And it says what's not covered, where it talks about mental disorders, alcohol or drug addiction, injury from an act of war, or attempted suicide. So if things like that happen, your policy is pretty much null and void for those services?
They would be, unless the company that you're purchasing it from has opted to cover those. So they're saying by law they don't have to cover this.
Okay.
But the insurance company can choose to cover those.
Okay.
So you'll want to ask that question.
Okay. And now it has on here how much coverage you're going to have, maximum benefit amount, daily, weekly, monthly limit. What are those?
So when you purchase a policy, you're either going to purchase a policy that gives you a daily limit or a monthly limit. And I may have even seen one where it was a quarterly limit, but I could be wrong there. So for example, if you have a $100 a day limit and you're using $80 a day, then you've got that $20 left over in your bucket of money.
And that would make your policy last longer.
Right. That's going to make your
Okay.
policy last longer. If
Okay.
you have a $5,000 a month policy and you're only using $3,000, then again, you've got that $2,000 that's in your bucket of money.
Okay.
That's going to
Because
stretch your policy.
when you purchase a policy, what you're purchasing is a bucket of money, as you say.
Right. You're purchasing a bucket of money.
And so if you're only using 80 out of 100, you're not losing that 20.
Right. If you're using 125 out of, and you've only got $100, then you're going to have to come up with that $25 a day.
Right.
In addition to what your policy is
The
covering.
difference. Okay.
Mhm.
Okay. And it's talking on here about what types of benefit triggers. And I think you and I have had conversations that it depends on the policy as to what triggers the insurance company to pay for that. And we're going to need to take a break, but I want to pursue that because you really need to check with the policy to see how they determine when they start paying you
Right.
for your care. We will be right back. That's what I did before was I stopped it and I messed it up. So I don't stop it during the break.
Okay. So I'm going to dig
He
into this.
fixes it.
Okay. So I'm just going to.
Sorry about
That's
that.
okay. Premiums with other annual uncompensated medical expenses for deduction. So what they're saying is that the IRS allows you to include your premiums can be included with other annual uncompensated medical expenses for deductions from your federal income tax.
Okay. But they have to be a qualified policy.
Right.
So they need to ask about
Right.
that.
So they'll want to talk to their CPA about that, or whoever does their taxes, that including the cost of their long-term care insurance into their medical deduction on their taxes.
Is that something they should ask when they buy the policy?
They need to talk to their accountant about it, because for me to answer
Right.
an accounting question, I
Okay.
wouldn't feel comfortable answering that.
Okay.
I have resources though that I pick up the phone and say, hey, I
Right.
call my CPA or that my power partner, and say, hey, how would this, be handled? And I do know that there are some your health savings accounts. Sometimes you can use that.
Okay.
Pay your premiums out of as well. But those are areas where I always just defer to
Okay.
the CPA. But this is saying that premiums can be included in your annual uncompensated medical expenses for deductions on your federal income tax.
But they need to check with their CPA first.
Yes.
Okay.
And because they might not, let's say, it's from your income in excess of 7.5% of your adjusted gross income. 7.5% of their adjusted gross income might be $10,000, and their annual premium is $3,000.
Yeah.
And they don't have any other medical expenses, so
Yeah. Okay. Okay.
Yeah.
All right. So you're ready to start back?
I am.
And we're back. This is Connie Clark with the Senior Moment, and I'm talking to Sue Bressnee with State Farm about long-term care insurance. And I had asked you a question earlier, and we weren't really sure of the answer. So why don't you go ahead? And it has to do with deducting long-term care insurance premiums on your tax returns.
Right. So what they're saying is that premiums can be included with your other annual uncompensated medical expenses for deductions from your income in excess of the 7.5% of adjusted gross income. So what I would say to you is go talk to the person who's doing your taxes, your CPA or whoever that person is, and find out from them what that percentage would be. And if you're paying $3,000 a year for a long-term care policy, are you even going to meet that threshold?
Okay.
Is that a consideration you need
So
to
that
have?
might be something, but you need to talk to your CPA
Right.
about doing it. So then, before the break, we were talking about what kinds of things can trigger the policy being paid. And you really need to look at your policy because what we're talking about is the activities of daily living, like we
Right.
talked about earlier. Some policies say it has to be 2 of those things. Some of it has to be 3. It just depends on your policy.
Right.
And it also depends on who determines if you're unable to do those things.
Right. So again, it's all going to go back to who did you buy your policy from and what's their policy language. So they may say that you, of those 5 activities of daily living or 6 activities of daily living, you have to trigger 3 of those, or you have to trigger 4 of those in order for the policy to start. But then who determines if you've triggered those? Is it your doctor who determines that, or is it the insurance company's doctor? And most of the time we see that it's the insurance company's doctor that makes that determination. In the case of my neighbor, they sent somebody out from the insurance company to make a determination. Had she triggered these activities of daily living? And for our policy, you bring a letter from your doctor.
So it could be either one. So you really need to look and see.
You really need to look and see.
And I have seen in caring for people that you have good days and you have bad days.
Right.
And I have seen nurses come out and sit and talk to our clients who I know for a fact they're unable to do different things, but if they happen to come out there and ask them questions and have them demonstrate things when they're having a good day, that may not be a good thing for their policy. So you really do need to see what triggers, and then when do the benefits start? And I know there's different things talking about elimination periods. There's a 30-day, a 60-day, a 90-day.
Yep. A 90-day elimination period. So, and then this goes back to, again, what's the policy language? So is it 30 days of service that you've received, or is it 30 days of covered, of which you would have needed the care?
I have seen that both, that, okay, you fall and hurt yourself. Okay, that's day 1. But what if this has been something that has been gradually coming up?
Right, but let's go back to that. Did you pay for care for those services on day 1?
And is it calendar days or service days?
That's right. So you need to be very careful. If you're, okay, let's say you can't afford for that care.
So you're waiting that amount of days for the service to start.
But you haven't had any service days.
Right.
You're thinking it's calendar days.
So you really do need to look and see on your policy, because that means a lot.
It means a lot.
And a service day, can it say in there, I mean, a service day could be an hour or it could be 12 hours.
Right. So again, read the policy language. Make sure you fully understand what you're purchasing. So now if they're Medicare, they then would have those 100 days, but it would be in a skilled nursing.
They would have to be in a facility, not at home.
Right. So
just to confuse everything.
Right. So when you're making that determination, do you want a 30-day elimination period, a 60-day, or a 90-day? You need to understand, you need to have that money somewhere so you can pay for that care, because if you've got a calendar day policy, it's not going to be as crucial. But again, who's taking care of you?
Right.
So if you don't have a loved one that's there to take care of you for those 30, 60, 90 days, who doesn't have to go to work every day, where's that care going to come from? How are you going to pay for that?
And people may look at that going, well, if I put 90 days, that makes my premium lower. But in the long run,
do you have the money to cover 90 days?
How much does 90 days cost of care?
Right.
You know?
And what level of care are you going to need for those 90 days? Is it 8 hours a day? Is it 24 hours a day?
Yeah, that's and they're talking about the rise of inflation. I know I have seen Genworth puts out a study every year on how much things cost. And I've written articles in the press about that, the increase in cost. And I think the long-term care, the skilled nursing has been the highest increase in percentage that I have seen.
It's way above the 3%.
And so if we're talking about, now today it's $6,000-7,000. 10 years from now, it's going to be a whole lot more than that.
It is.
You can't really count on it staying like that.
And at $10,000 a month for, say, a dementia, Alzheimer's unit, $120,000 a year later, do you have those financial resources? And what level of care do you want to receive? Or what level of care do you want your parents to receive? Do you want to pick the facility? Do you want to pick the nurse?
Yeah, it's all very confusing, and I understand all this stuff. And it talks about also putting in some sort of inflation
protection.
in your policy. Because again, if you buy a policy now that's going to pay you $2,000 a month, and you don't need that for 10, 15 years, and it's still $2,000 a month in 10 or 15 years, that's not going to pay for as much as what you think you're getting now.
Right. It's better than nothing, but it certainly isn't going to be what you need in 10 years to pay for those costs.
Absolutely. And then there's some other things on here that talks about, does your health affect your ability to buy a policy?
You have to qualify for a long-term care policy. You can't buy a long-term care policy. You have to qualify.
So if you've been diagnosed with some sort of terminal illness, you can't turn around and buy a long-term care policy.
You need to buy a long-term care policy before you need it.
So when you're healthy.
When you're healthy. Because, again, you have to qualify for it. So there's a series of health questions that are going to be asked when you apply for it. And then you're going to have a telephone interview that's going to ask extensive medical care. And then you're going to have a cognitive interview on
Do
the
they
telephone.
ask for your medical records?
If they need to, when you apply for the policy, you will sign an authorization allowing them to access medical records if they determine in that medical interview that they need to pull medical records. I will tell you, if you've broken a bone, you've got 12 to 24 months before you're going to be able to purchase a
From
long-term.
that point.
From that point. From your point of recovery. And before you can purchase a long-term care policy. If you've been diagnosed with what's the joint?
Osteoporosis.
Thank you. Depending on the level of which you have that disease, you may not be able to purchase a policy. So you have to be very careful when you want to make sure you buy the policy before age sets in.
Before you need it.
Yeah.
Very interesting. Very interesting. And how much do long-term care insurance policies cost?
It's based on the level of coverage that you want. So how much is your daily benefit or your monthly benefit going to be? How old are you? And with our policy, we have a standard and a preferred rate. I don't know about the other insurance companies if they offer that. And then what are the features that you add to that policy? So it could cost, as little as $100 or $80 a month. And I've seen those policies run several $1,000s a year to purchase. But again, we're talking about age, health, and benefit period, coverage, all of that.
And just like anything, you tweak 30, 60, 90 days, you tweak your inflation.
Right, you add an inflation rider. If you want the $250 a day max, with an inflation rider on top of that. Do you want and we're going to go into some of the benefits, but do you want restoration of benefits? Do you want...
What does that mean?
Restoration of benefits means that if you activate your policy and you use it, let's say for 6 months, and at the end of 6 months you've had recovery to the point where you can care for yourself and you no longer need the policy. So you then, and when you... With our policy, once you start to receive benefits, you no longer pay for the premium. And then after 6 months, you're recovered, you start paying your premium again. And then if you go 6 months without any care for that incident, we refill your bucket. We restore your benefits
to what it was originally.
To what it was originally. So if, say, you used $20,000 or $30,000 of your benefit coverage, we're going to refill your bucket back up and give you back that coverage.
So restoration of coverage, that's something you need to ask about.
Right. Because it's
if that's offered and all the particulars about that.
Right. So those are all going to be determining factors. So again, meeting with an insurance agent, getting educated on this, looking at this booklet, and sitting down and saying, okay, what can I afford? What kind of care do I want to receive?
And I would see this, we've talked about sitting down with your family and discussing, your living will and your durable power of attorney and all of those kinds of things concerning your care. This is another thing I would think you would sit down with your family and talk about, because whatever you determine that you're going to get or not get in here is going to affect them.
It is going to affect them.
In the long run.
And I have had more times than not someone say to me, I'm going to move in with my kids. So do your kids know that you're moving in with them? Do your kids, are they going to be able to quit their jobs to care for you? Maybe you are going to move in with them, but if you have a long-term care policy, then they still go to work during the day and come home and be with you in the evening. How is that going to work? And I mean, I grew up where we took care of grandma. She lived with us until she passed away, and I think that's a wonderful thing to be able to do. But that's not always going to be the right fit for every family.
And that was back, we've talked about a lot about what it was like in the 50s and 60s where moms stayed home.
Right.
And cared for the family and cared for grandma and grandpa and all of that. And nowadays, mom doesn't stay home and dad doesn't stay home.
Right.
Everybody's out working.
Right.
So who's going to stay home and care for grandma or grandpa?
Right. So that's, that's a family conversation. And again, maybe you can't afford this policy, but maybe your children want to get this policy for you so that because they want you to have the level of care that they want you to have. Maybe it is in their home. Maybe it's not in their home. Maybe it's in your home, but they want you to pick your nurse. They want you to pick the person who comes in and takes care of you. Those are all conversations you need to be having with your family.
You really need to talk about this with your children and your extended family, because when something happens to someone, it not only affects that person, but everybody in the family.
Absolutely.
When it comes to care for them.
And Connie, you're going to know this statistic way better than I am, but the caregiver typically predeceases the one who's being cared for.
Their health goes down a lot faster because, and especially when it's a female, because we're nurturers, we care for other people, we care for our children before we care for ourselves. And so that's what happens when you're caring for someone is the person that you're caring for is, their health is good, they're eating good, their clothes are clean, and you're the one that's suffering because you're not eating, you're staying up all night caring for them, you're not getting your rest.
Especially if they have dementia of some sort.
Absolutely.
That person's not sleeping. The caregiver's not sleeping because they're always concerned on guard. And I saw it happen with another neighbor of ours where he hid from everyone that his wife had Alzheimer's for 2 years. He baked the Christmas cookies and told us that his wife had baked them.
Aww.
So he was doing things way beyond what his normal spectrum of daily life was to cover up for her Alzheimer's.
Yeah, so this is something very, very important. So it says, what options do I have to pay the premiums on this policy?
And you know what, Connie?
Or you want to go back a little bit?
What page are you on? Because I
am on page 30.
Okay, I'm going to go back because there's a couple of things that are very, very important that I think people need to be aware of. Some additional benefits. So third-party notification. It is imperative that if you purchase a long-term care policy, that you put on there a loved one who their name, their address, their phone number, so that if you do not make these premium payments, the insurance company contacts them before the policy lapses.
That makes sense.
Well, a friend of mine, her father had a long-term care policy, a very nice long-term care policy. Dementia set in. He quit paying the premiums.
That's what I was thinking.
By the time they discovered that he was not going to be able to care for himself any longer, it had gone beyond the renewal period for them to reinstate the long-term care policy, and it was too bad, too sad. If he'd had a third-party notification in his policy, they would have been notified, they could have paid the premiums, and then they would have caught on to Dad's dementia sooner, too.
Yeah, because that's one of the things you see with people with dementia is their inability to, as it progresses, their inability to be able to comprehend paying the bills when they're supposed to pay them, how often, that sort of thing. So that's a good point.
So, and it states in here the waiver of premium. We talked about that once the policy starts to pay out benefits, that the premium is waived. You want to make sure that that's a benefit. It's not a requirement in the policy.
Oh, okay.
So
you have to ask for that.
You do. Well, you have to make sure it's going to happen. So it says many policies automatically include this feature, but some may only offer it at an additional price.
Okay.
So do you want to keep making premium payments when you're receiving benefits? The restoration of benefits, we talked about that. And then this is what if you can't afford the premiums anymore? And there is a feature, it's called the non-forfeiture of benefits. So everything that you pay in, you get back. I have never sold a policy with that benefit feature because it is so expensive.
Oh, okay.
It's a very expensive feature to have in there, but it's available. And if you can afford it, it might be something that you want to consider. We've gone past that.
Well, let's
so-
take a break as we're looking through
Okay.
here. And again, if anyone wants to get this book, they can either call Sue, or we're going to have some information in here because the different states offer it also. Is that correct?
You can get this through the different states, right? And anyone can stop by my office at
Okay.
724 North Highway 41.
Right
in
next to
Post-
Sonic.
Yep, right next to Sonic. They're in Post Falls. I've got them in the office. They come free of charge to me, and I'd be more than happy to
Okay.
share them.
We're going to take a break and come right back and continue talking about long-term care insurance.
And we were on page 30. So what options do you, how do you pay this? Monthly, quarterly, annually? Okay. Single pay.
Yeah, this is pretty neat. I like going through this because we're not really.
It's not about me.
No.
No.
We're
it's
talking
just
about what's.
Yeah,
what's
this is
in here.
perfect. And this is what my compliance officer told me I had to do anyway.
Yeah, we're doing it. So
Yeah.
we're good. Okay, you ready?
I'm ready.
And we're back. Again, this is Connie Clark with Home Helpers, and you're on the Senior Moment. And I've got Sue Bressnee with State Farm, and we're talking about long-term care insurance policies. And we have a book here. It's called A Shopper's Guide to Long-Term Care Insurance, and it's put out by the federal government, the National Association of Insurance Commissioners. And it's everything you've ever wanted to know about long-term care insurance policies but didn't know you needed to ask. So we're just kind of walking through the book here, talking about some of the different things that are in here. And if you are interested in this, again, you can go to the National Association of Insurance Commissioners or stop by Sue's office, and she's got a bunch of them there. So what we're talking about is how often or how do you pay for the premiums?
You can pay monthly, quarterly, annually.
So it's just whatever you set up.
Right. And typically, if you're going to pay annually, you're going to receive a little bit of a discount for doing that. You might save $100 or $200 a year by paying annually.
Okay. And it says on here, if you already own a policy, should you switch plans or upgrade the coverage that you have now?
And they put in big, bold print, and I feel the same way about life insurance as I do about this. Never, ever, ever cancel your policy until the other one's in place, the new one's in place.
Good point.
Because what if you can't qualify for it?
What if
Because
something's happened to you and now medically you're
ineligible to purchase
Right.
the policy. So do not cancel your policy that you currently have until you have the other one in place.
okay? And it talks about, it says some shopping tips to keep in mind. This book is really, really interesting. It tells you to ask questions, to go to several companies, to check out the rate increases. Now, if all of a sudden I get sick, can they come and increase my premium?
They cannot increase your premium on you. They're going to have to increase it on the entire pool. So
Is that everybody in the nation or everybody in North Idaho?
it's going to be state regulated.
Okay.
So it's going to be determined on their pool within that state. And long-term care insurance, I see it increase every year. Not with our company. I mean, we've had one rate increase since we started selling the policy in 1995. But I have seen companies where every single year my policyholders are coming in with their old policy with another company, and they're saying my rate went up again.
So you may want to check the history of the company to see if they do that.
Right. And another item it mentions in here is you want to make sure that you buy an insurance policy from a company that's going to be there to pay the premiums or to pay the benefits. How safe is that insurance company?
So there has been some that people have bought long-term care insurance policies on and then they go out of business and you're kind
That's
of
right.
out of luck?
That's right. So it says here,
Wow.
check on the financial stability of the company you're thinking about buying from. You want to make sure they can pay the benefits that you've purchased.
Wow. Okay. And it says you need to take your time to compare coverage, understand the policy, and that's something we've talked about all the whole hour here is understand and not to be misled by advertising.
Right. And I had one of my policyholders bring in a quote that he had received from another company, and he thought he had, was really clear on what he had requested. And as we dug into the policy, the monthly benefit was different than what he thought. So,
Different than what they agreed on.
Well, and it wasn't that the person was deceiving him. It's just that maybe there was a misunderstanding, that he thought he had requested this much and the quote came back at this much. So make sure that what you're asking for, you're getting back on the quote. It can be human error. I'm not saying people are deceptive, but make sure that you're getting what you've asked for. And then that company, you had to elect all of these additional benefits. If you wanted restoration of benefits, if you wanted home health care.
So it was like a menu-driven kind of thing.
It was a menu-driven policy rather than, with our policy, pretty much you get all of these features included in the policy, other than the that one that we just talked about, and
the restoration,
the non-forfeiture.
Okay,
the non-forfeiture feature. So, are you getting a complete policy, or are you doing an a la carte and you're having to pick those benefits? And then some of them are going to offer you a spousal discount. So if you and your husband purchase both policies, you're going to get a discount for it. That may not be the case with all insurance companies. It might be that if you apply together and maybe one policy is purchased or one policy is declined, the other person still maintains that spousal discount because you purchased, you applied together. So you just, again, it's education, right? It's understand what you're purchasing. This book lays it out step by step.
Oh, absolutely. And it says on here a free look period. How long is that?
The free look period.
And that means you've signed everything and you get the policy, but you have so many days to say, I don't want this.
Right. And I am going to say that it's 30 days. But Connie, what page are you on with that free look period?
34.
Page 34.
And I think it says depending on the state.
Okay. And I'm going to go with 30 days, but it could very well be different. In most states, it's 30 days. Yeah.
Okay.
That free look period.
And one of the things that it has on here, we talked about, check about the financial stability of the company. It's got some rating agencies on here with their phone numbers. Does that mean that they can rate the long-term care insurance policy companies?
Right. What they're going to do is these companies put out a rating on the insurance companies. And I think I have access to this generic program that I can pull up ratings of other companies and compare them to where...
So you could, because you're saying check out the companies. Well, how do you do that? You go on the internet,
right. And check with your insurance agent. They may have access to that similar type program that just pulls it up and says where's this insurance company rated right now for their financial stability, because this is a big purchase.
It is. You're talking about a lot of money.
Yeah, you want to make sure that insurance company is going to be there for you when you need the benefits.
And so they have on here, it looks like 5 or 6 different rating agencies. It's got some references in that. This book is just so neat. And then it's got a glossary of terms. So as you're going through the book, if there's different things you don't understand, it's like, okay, when they say in the activities of daily living, what is bathing? There's a definition here of what bathing means.
Right. And what continence means.
And what continence means. I may not be able to get in my bathtub simply because I have to step up, but that doesn't mean I can't bathe myself.
Right. And is that considered transferring?
Yeah.
I mean, can you transfer? Well, everywhere but the bathtub. So, and who's going to determine that? You, your doctor, or the insurance company?
So they've got all of these things. There's, what is waiver premium, all of that. And then it's got some worksheets in the back that I really found interesting, because the first one tells you to go out and find out how much everything costs. How much...
Educate yourself.
Educate yourself. It's telling you to compare everything. And then it gives you some ideas of how to compare long-term care insurance policies. Because, you could hold them up next to each other and go, yeah, they're on paper and I see printing, and yeah, they look pretty much the same. Mm-hmm. But this gives you some really specific yes-no answers, questions you have to ask as you're looking at the policy. I see one question here: what is the length of the benefit period that you are considering? And it's got, you put down the amounts, and it forces you to compare the two policies.
Right.
So this has some really, really good information because you wouldn't really know. And it also, has information for you to put down all the information, how much you make, how much this is going to cost. And it has the contact numbers for all the Department of Insurances for the state. So let me ask you a question, Sue. Someone who walks in with this and starts talking to you about a long-term care policy, what is the conversation like versus someone who's never investigated anything having to do with long-term care, and they come in and try to have a conversation with you?
Well, they're going to understand really what this is about. They're going to, first of all, they're going to know that they need long-term care insurance, that they understand that Medicare is not going to be providing that for them unless they're in a skilled facility for those 100 days, and then after that it's not going to be covered. They're going to understand the terminology. They're going to be asking the right questions. Does your policy have restoration of benefits? Third-party notification, how important that is to have that on there.
Yeah, I hadn't even thought of that, but boy, that sure does make sense.
To me, it's crucial that they have that third-party notification. If I have a policy lapse in my office, we're proactive and we're reaching out and making sure that
you've talked to the person,
it's,
and the family, and
right.
stuff.
And that goes for all of our policies, not just for long-term care. But not every agency does that. Not every office does that. So
and if you've purchased a policy 20 years ago in Maine,
right,
and now you live here,
right,
your insurance agent,
Which brings up a thought in my mind that in the state of Idaho, we have what's called the partnership program. And it's regulated through the state of Idaho. And as far as Medicare is regulated through your state. And the state of Idaho has said, if you are proactive and you purchase a long-term care policy that meets our partnership qualifications. So when you're out shopping for that long-term care policy, ask your insurance agent, does this meet the partnership program for the state of Idaho? Because what that means is that if you buy a policy, and let's say that policy has a bucket of money of $200,000.
Okay.
The state of Idaho says, because you were prudent and you purchased this policy, and if you exhaust the benefits of that policy, we're going to allow you to maintain $200,000 of your assets and qualify for Medicaid.
So let me back up here. So you buy a long-term care policy, and the bucket of money is $200,000. You exhaust that $200,000, and now you're thinking, okay, now I have to pay for all this by myself. If you only have $200,000, and it could be $200,000 in a savings account,
or a house, or whatever that
Okay.
asset is,
you could go in and then apply for Medicaid, and even though you had that $200,000 in asset, they would approve you for Medicaid.
That's
and
correct.
not. And so when
but
you
you have to purchase the long-term care
Right.
policy that's called a partnership policy.
Okay, and so then when you die, when Medicaid comes back to your estate to recover that, they will not touch that $200,000.
That's correct.
Wow.
That's in Idaho. And there's a few other states that are offering it. I don't know how many are offering it right now, but that is something a couple years ago that the state of Idaho and their Medicare program, Medicaid program said they want people to buy long-term care policies, and this is their way of saying, hey, go buy this policy because you're going to need it. And if you've done that, we're going to honor that amount of money that you preserved, the expense on the state, and let you pass that on to your heirs.
But it has to be a qualified policy,
Partnership.
and I guess not all
Correct.
policies have that.
So anything that was written prior to that implication,
Prior to that law or whatever.
Right.
Okay.
then it would not qualify for the partnership program. So you would have to reach out and purchase a new policy. But you have to be very careful when you're buying a new policy. Can you qualify for it? And are the benefits and the coverage going to be adequate? Are they the same as what you've had in your previous policy? So be very careful if you're going out to replace a policy. But if you want to preserve a portion of your estate to either care for yourself or pass on to your heirs, that's a way to do it, is through that program.
And that sounds like a really good discussion, because we were talking about discussing all of this with your family. I have seen a lot of instances where the parents had to go on Medicaid, and now they're being cared for, for a period of time, and then when their parents pass away, Medicaid comes back to the estate to recover that money that they used to care for that person. And a lot of families think, oh, well, I have my home and that'll be for my kids. And if Medicaid comes in, they could take all the assets from the home and there's nothing for the kids.
That's right.
So the children need to be a part of this conversation to understand that, yeah, your parents still could go into the Medicaid system, but this much of their assets will be preserved for you.
Right. And some people don't have legacy concerns. Either, they said, I've worked my whole life and this is my money. It's not going to my children, or maybe they don't have children. So there might not be a legacy piece, but at least with a long-term care policy, you get to determine the quality of care you receive.
Because not all facilities take Medicaid. Assisted living does not take, for the most part, does not take Medicaid. I've heard some of them do, but mostly not. Not all skilled nursing facilities take Medicaid. And if they say they do, it could be just a small percentage of their population.
Right. Do you want to be in the Medicaid wing?
And even...
Can you get in the Medicaid wing?
Even not so far as in a skilled facility, there are personal care services that are paid for by Medicaid in the home. But Medicaid determines how many hours and exactly what kind of care, what is done for you.
Right.
And the agency that comes in to care for you cannot do above and beyond what Medicaid says they can do.
Right. And so maybe you qualify for Medicaid, you're at home, and you receive those benefits, and then you might have some financial resources then because you had that partnership plan to supplement.
So you can get more care than what they say. Very, very interesting. Well, the information in this book, it is called A Shopper's Guide to Long-Term Care Insurance, and it is put out by the National Association of Insurance Commissioners. And I will give a website just so people know. It's www.naic.org. And again, they've got, I went on there and I saw several different publications, but this one in particular, the Shopper's Guide. But if you want to pick one up here locally, Sue has some in her office, and I would think that anybody who provides long-term care insurance should probably have these. But if you don't really know where to go or you don't already have somebody, you can always pick one up at her office. No obligation, no sales pitch.
Nothing. Just swing in and say, hey, I heard you on the radio and I'd like one of these Shopper's Guides.
And this is at the State Farm office next to Sonic on 41 in Post Falls.
Right.
Close
and our phone number is 457-9000. If you want to give us a call and just ask questions or just say, hey, I'm going to swing by, where exactly are you at?
Because this book has so much information. It not only gives definitions, but there's all kinds of workbooks in the back and contact information. And if you're considering getting long-term care insurance, I would say get this and go through it first before you go talk to anybody, so that you know what you're asking and you know what questions to ask. Because if you don't know what questions to ask, they may not assume you have a question and not even bring up the subject.
Right. I mean,
like the third party, I kind of skipped over that, but that's a really important thing.
Yeah.
So I appreciate this, Sue. Thank you so much
You're
for coming by here this afternoon and talking about this.
You're welcome. I enjoyed it.
Again, this is Connie Clark with Home Helpers, and you've been listening to The Senior Moment. You have a good weekend.